No, I don't want that. So Teams has actually changed how they present things. Oh, come on. I'm trying to use my touchpad, which doesn't work for me. Just a second.
I never heard back from Joel. I'm assuming he doesn't check Teams anymore on changing that date.
Oh, better reach out to him. I think he was on vacation last week too.
Okay.
Doing something, helping a friend move or doing something.
Maybe I'll text him. That's probably the best way to get a hold of him anyways.
Yeah. Damn it. I'm trying to move screens and now it's not letting me do anything. All right, I'm just gonna leave you over there. I won't look at you. All right, I am ready when you are.
All right, I'm hitting record on Audacity.
Okay.
Ready?
Ready.
1,
1,
2,
2,
3.
3. Hey Nick, how you doing this afternoon?
Doing great, Dave. How are you?
I'm doing well. Today's going to be an interesting one. We're going to have a totally biased discussion of investment in real estate.
That's right. The old rental real estate question that we get quite a bit from clients
Yep.
about whether or not they should do it, or if they are doing whether or not they should keep doing it, or what role that plays in their overall financial picture.
Right. And it's like I said right at the beginning there, it's a totally biased view because we all have our own opinions, right? And we've all got some experience in the area one way or another. And in my case, the experience was not great. So
Yeah, it's you're talking to a couple of investment guys, and so very comfortable in the investing world, but not necessarily in the real estate world. I imagine if you
right.
went to some real estate professionals, they would give you the exact opposite opinion, and the reality is the truth is
Yeah.
somewhere buried in the middle, and it kind of depends on you and your situation.
Right. And I guess I should also say my biases aren't because it was a financial disaster or anything for myself. It was fine from that standpoint. But we're going to talk about some of the things you need to think about with investment real estate and rentals. And overall, it just wasn't a good fit for me.
Yeah, I think it's certainly what I have learned from my clients that have done it or do it is it takes the right kind of person, and it really kind of depends on what level that you want to get into the investment real estate world, and how you're accounting for that in your overall financial plan.
Right. So, there's an old adage that real estate can only go up because they're not making any more of it. And I guess in some senses that's true. But, if we look at the history of the last 20 years at least, it's been a pretty bumpy ride in the real estate markets. But, I guess the first thing I would say is a lot of people, I think they're biased towards real estate, whether it's their house, investment property, or rental properties, is that, on any given day, you can tune in to CNBC News and see what the stock market's doing, or you can jump on TD Ameritrade or Fidelity or wherever and see how your account value has changed in real time. And that's not really true with real estate. And I think it creates this false sense of security that you don't have to worry about the prices.
Yeah, unless you're jumping on Zillow and some of those other ones that are, updating that stuff every day. But, all the real estate professionals that I know that talk about Zillow say it's wildly inaccurate. And so there's a lot
Right.
of mistrust about it. But a great point about, if you, it's just people think about it in a different way. And a great example is
Right.
2008 when real estate was tanking. There weren't people lining up to try to sell their house to get out of it. So, and to rent instead of own, almost everyone to a T said, we'll just wait until it comes back up before we sell, right?
Right.
Which is
Right.
exactly
Right.
what we tell people to do in the stock market, but studies show that it rarely actually happens that way.
Right. 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 And so that lack of transparency in the market and knowing what the prices are is also kind of a symptom of another thing to keep in mind with real estate, and that's that it's just not liquid. If you invest in real estate, you got to consider it a long-term investment. There's no quick fix for that. And if you want your money back out of that investment, you're either going to need to sell it or take a loan against it. So, you cannot go into it with a short-term view.
Yeah, not quite the same as hitting a couple of buttons on your brokerage account
Right.
online and selling a position. Much different and much more costly too, unless you have your own real estate license
Right.
and your own, brokerage license. There's going to be some fees associated with selling real estate, and it's also not a click of the button worthy, although it has, I'm sure, gotten
Right.
faster. It's still a
Yeah.
relatively slow process and not always, so there's not a lot of buying and selling going on as a principle because of that.
Yeah. Yeah. Flipping houses makes for interesting reality television, but unless you're really lucky or you just absolutely don't value your own time and sweat equity, um, it's not necessarily a good retirement plan.
Yeah, absolutely. And I think from my perspective, if you are going to do it, because certainly we have clients that do it, you really have to do, well, there's one of two ways to do it successfully in my eyes. One is treat it like a business,
Hmm.
which is make sure that you're accounting for everything. So, and usually when people want to get into real estate, it's not necessarily because they want to run another business or have a second job. They think it's going to be a good investment for them.
Right.
In order to
Well,
be successful, you really need to run it like a business, which means spreadsheets and accounting principles and all that stuff that goes into it that most people kind of gets murky when they're doing it,
right.
one or two properties here or there.
Right. Yeah. There's this misnomer out there. It's often called passive income, as though your only job is to walk to your mailbox and collect your checks from your rentals. And in reality, it's anything but. Um, you're pretty much going to have to treat it like a business, or it's not going to work.
Hmm.
And and so with that, and this is where it wasn't good for me. It was a whole nother level of it wasn't even that it was that big a time commitment really, and I had decent renters, but it was a stress level of what could be going wrong and what am I going to have to deal with next that I just didn't need on top of everything else.
Yeah, just that kind of sense of is it going to break?
Right, right, right.
Yeah.
And so, and we've had clients that were very successful landlords, but it's not for everyone. It takes a certain personality.
Mm. Yeah, absolutely. I think sometimes people forget about the landlord aspect of it.
Right,
And successful landlords are, a rare breed, if you will, because there's some tough conversations that you have in order to
right.
be
Yeah,
successful, and you have to be able to be willing to put people out if they're not paying and not, cut them a deal or do different things. And so that's a really hard conversation that a lot of people don't enjoy or want to have, and that
right.
can cause issues.
Or, and balancing like how hard is it going to be for me to replace this renter if I do get tough with them? Because
Right.
then you're, foregoing income unless you can turn around and get another person in there really, really quickly. And you just need to take these things into account. And calling it passive income just makes me kind of chuckle.
Yeah. It's the least passive income that you'll ever have, right?
Right, right. Right.
And I've fortunately been blessed to know that I can barely take care of my own house. It's the last thing I want to do every day. So to
Right.
have a second one to take care of, forget about it. I'm blessed to know
Right.
that about myself that I would never even try it. But there's people that don't mind doing that stuff, and I think that's fair. But I think what a lot of them forget about not minding doing that stuff for themselves is doing it for someone else is a whole different ball game
Yeah.
on their schedule, on their time frame is a whole different ball game than doing it for yourself when it
Yeah.
suits you.
Right. Right. You may be fully capable of remodeling your own bathroom and hooking the plumbing up and moving light fixtures. But when you either have to pay someone or do it yourself to make ends meet to keep a renter in place, it's a whole different calculation.
Yeah, for sure. And definitely something that you don't know how you're going to react to it until you do it, right? Like you said about your own
Right.
experience of, it wasn't necessarily that you couldn't do it, it was just the uncertainty of when you're going to be called upon to do it and
Right.
what that looks like and the sleepless nights
Right.
that follow that. That's something that you don't get without experience. So,
Right, right. And so, the other part of that is you can hire out these jobs and you can pay rental management agencies to handle these things for you, but then you're really saying that you're not worried about the current income from the rentals. You really are just invested for the long term. So it can kind of take you back to where we started with that. And then the other side of that is if you're going to do it on a scale to make it profitable, you're talking a lot more capital and a lot more work. That in order to hit those profits and have margin in rental businesses, you've got to get to a certain level.
yeah, hold on one second, Dave. I'm going to shut off the air conditioner that just kicked on so Hammond doesn't yell at me. What
Okay.
time is it? 10:30?
Yep.
Sorry, I didn't even realize we had the air on.
That's all right. So we're back on at
Yeah, hold
11:30.
on. Oh, I gotta let it kick off real quick. Takes a second.
Okay.
10:30. Stop. Oh, Lordy.
Last week it was my dogs. This week it's
I
your hair.
know. Hopefully it won't mess it up too bad because I was trying to be quiet, so I don't think you would have to use my recording for that piece. Didn't think it would take this long to listen. There it goes. All right.
All right, where were we?
30. All right. I
Scale.
think we were at, yeah, scale. Um, so, all right. Yeah.
Go ahead.
Yeah, I think you're right, Dave. I think you definitely have to think of it in the business mindset of you're running it like a business. And it really truly is a second job. And from my perspective, you probably don't need or want a second job, unless it's something that you love. And if you love it, if you absolutely love real estate and you love the thought of, buying a house and fixing it up and having renters in it, if that appeals to you and you love it, then it won't feel like a second job. But if you don't, if there's parts of that that you really truly don't enjoy, it's always going to feel like a second job. And so that is going to cause you to, yes, maybe you're making a decent return on it, but are there similar returns out there that are going to allow you to live and focus on the things that are most important to you so you don't have to focus on a second job? And that's really the way that I would tell people to look at it is
Hmm.
if it's something you love, great, absolutely. We're never going to tell somebody to not do something that they love, but I think most people fall
Hmm.
into the category of it seems like a good idea. I could make a good profit on it because I've seen other people do it before, so I should probably go ahead and do this because I read Rich Dad Poor Dad or whatever it is, and I need this to be successful, and that's just simply not the
Right.
case.
So I think this would sum it up pretty well. Retiring from your career to run rental businesses for your retirement income isn't really retiring, it's a career change.
Yeah,
Yeah.
absolutely.
And that again doesn't necessarily maybe that is for you, but just go in eyes wide open and know what you're getting into. Another aspect that people talk about with real estate is the ability to buy real estate using mortgages, where essentially you're using someone else's money to generate profits and income to yourself. And the way that our tax code is set up and the way the mortgage market works, that can be a pretty good deal. But you've got to consider, and our job half the time is pointing out risk to people, right? And so leverage, borrowing to create a bigger real estate portfolio is great when the market's going up, but just compounds your losses when the market's going down. And at the same time, the market's going down is probably going to be about the time that you don't have any renters that want to live in your units or businesses that can operate and pay you rent. And it's also the time that you're least able to make sales of your properties, and the bank is still going to want to get paid.
Yeah, absolutely. And I think, it comes down to, we talk about it a lot on this podcast, what's the risk and what's the reward? The higher the reward, the higher the risk. And so if you go
Hmm.
into this thinking, okay, well, I can, leverage and I can get a 15% rate of return based on all my calculations, well, that equates to a pretty decent sized risk in order to get that return as well. And so you got to be aware of that. And that's where things like leverage come in, things like the market cycle and the fluctuation of potentially of real estate or, not or the illiquidity of it. And I think a lot of people miss the whole first step, which is trying to figure out
Hmm.
how much they're going to make to begin with. Like, what's your goal for what your return is going to be?
Right, right. Because just like in any other market, there's no free lunch. If returns in real estate were that easy, everybody would be doing it, and the profits would disappear.
Right. And the flip side of that is there are some good returns in real estate if you're doing it right. And the reality is there's a lot of large companies that are doing
Hmm.
it that own multiple properties and they're buying up all the ones that they think that they can turn a profit on and professionally as a part of an overall business with lots and lots of money. And so it's really hard to find properties that they haven't already come across and either decided they didn't want or didn't want to pay the price that you might have been willing to pay. So you got to think
Hmm.
about how that fits into it as well.
Just an observation. I don't really have any numbers, but it's something that comes to mind. A few years ago, I would have I would have said that it's more likely that you could find a mispriced or underpriced piece of real estate, whether it was for rentals or vacant land or whatever, then it would be likely that you could find a stock that no one had heard of yet, or something that was some value that had just been missed by everyone else. But in the days of Zillow and Realtor.com, I'm not sure that's the case anymore either.
Yeah, I mean, and it's certainly the housing market that we have makes it even that more challenging, right? The time to
Hmm.
buy real estate was in 2008 when nobody had
Right,
the
right.
ability to get mortgages or to have cash to put towards it.
But well,
Similar.
but bringing it full circle, that was the time to buy stocks too.
Yeah, that's very,
You know,
very true. Yeah, same
and
thing going on.
and I did just as I don't want to dwell too much on this for our purposes today because it's really not the point, but just comparing the Standard and Poor's 500 index to the national home price index, over the last 20 years, the S&P 500 stock index beats the home price index hands down over and over, year in and year out. So, obviously there's more to it than that, so I don't want to get too into the weeds on it. But to just compare, a potentially passive investment in a index mutual fund, to running rentals, I'll take the passive index mutual fund any day.
Yeah, absolutely.
So,
And I think another thing that people are, just to touch on real quickly, that people are seeing out there is, what's going on with the changes in things like Airbnb or VRBO, where you can,
hmm
have a vacation property and you can buy it and rent it out when you're not using it. And,
hmm
there's some merit to that. There's a lot of people that do that, but,
yeah,
with the pandemic, a lot of people got caught
true.
um and really struggled. Now that section of the market, as far as I know, kind of bounced back pretty quickly,
hmm
because more people wanted to rent a house than maybe go to a hotel with a bunch of other people. But the
Yeah,
reality
yeah,
remains that there's still a lot of risks involved in that, and a lot of people really got in trouble with that.
yep. But okay, so let's talk about it from a financial planner standpoint. You've got a client who wants to own a vacation home on a lake in northern Michigan during retirement, and they're going to use it, Fourth of July and Memorial Day and Labor Day, and maybe a couple weeks in between with their grandkids,
Mhm.
and they can afford it, but it's kind of on the edge of their comfort zone. There's a situation where participating in VRBO or um, Airbnb, may make sense. But again, recognizing that there's work involved and there's cost involved, you're gonna have to pay to get it cleaned or clean it yourself. In between each one, you're gonna have to manage those things. But if it gets someone closer to those kind of goals, it's not that we don't like to see it. It's just that a lot of times people, I think part of it is when I talk to people about investment real estate, a lot of times it's like black and white. Either we're going to do liquid investments and market-based investments, or we're going to buy real estate.
Mhm.
And, either one may be a mistake.
Yeah, and I think, the people that are looking at real estate are obviously getting that idea from somewhere. And I think a lot of it is, an emotionally based decision of kind of keeping up with the Joneses. I think everybody has someone in their life that's in the real estate business and they're quote unquote crushing it or talking about, how they flipped a house or how they have all
Hmm.
these properties. But I think that kind of tugs on the emotions of, hey, I should be doing this. This is something I should do because look at how well this person is doing. And what
Right.
I would say to that is that's on the exterior. If they have a business plan and are, keeping track of profits and percentages and things like that, it might look a whole lot different, number one.
Yeah.
But and I think, number two, that's kind of like on the outside of what you see, not necessarily what's going on behind the scenes and how stressed out they might be. And so I think
Yeah.
being careful with that, because it's not for everyone. Certainly there are people that it will be for that do a good job with it or it's their career, but there's a lot of
Right.
people that try to dabble and unfortunately that's typically a way that you can tend to get into trouble is by being half in.
Yeah. Yeah. It's true of just about anything.
Yeah, very true.
So, yeah. Yeah. So, the bottom line is, know what you're getting into, pay attention to the details. Don't expect things don't expect returns that are not in scale with the risk that you're taking.
Yeah, I agree. And what I tell people too is if it's something that you love or you absolutely have to have in your life as kind of like a heart's core to try to live your life without regret, then I don't want to stop anybody from doing that, but I want them to go in with all the information going in as opposed to just doing it because it seems to be like a good investment, and not realizing what is all involved in that. And so that's why we have these conversations a lot because it comes up with clients. And for some clients, it's a great piece of their overall picture. For a lot of clients, it's something that they probably wish they wouldn't have done.
Hmm.
Um, so it just kind of depends.
Yeah. Yeah. So I guess that pretty much covers our totally biased discussion of
Yeah.
investment and rental real estate.
That's right. If nothing else, you can at least say you listen to somebody else's point of view and move forward on your own. You're at least getting the information.
Hey,
So
yep,
somebody's got to take the opposite view, right?
that's right. That's right.
So,
All right. Well, I'll talk to you later, Nick.
all right, sounds good. Thanks, Dave.
Bye.
All right. Export.
Ah,
Real estate.
well.